This is John Paulamy of the Actionable Intelligence Alert. Today's March 11th, 2018, and the title for today's video is Why Did Jericho Oil Jump 30% this week? Plus, I'm going to have some bonus coverage on Ensco, the offshore oil driller. Is it making a double bottom? So, Jericho is one of the stocks that I profiled in my beginning of the year article on stocks that I thought would do well this year. I've actually owned Jericho off and on and followed the story for about 3 or 4 years. And some of the recent activities of the company have really got me excited about its future for 2018 and beyond. As you can see from the chart that I've just put up, the stock price went from about 80 cents to $1.08 this week on huge volume. You can see down here, guys, the volume is just like explosive. I mean, money just poured into this thing. About over 2 million shares traded this week. Normally, this thing doesn't even trade, hardly at all. Less than 100,000 shares some weeks, even less than that. And it just blew up this week. And the reason it blew up is because a guy named Keith Schaefer, who writes an oil and gas newsletter that's been published for around 10 years that I know of, basically did a profile on the company. And it was extremely positive in my view. I believe it was sponsored by the company, but that doesn't take away from the fact that the facts that were presented are in fact, very positive and make the company very prospective in my view. So one of the things I want to talk about as it relates to Jericho and some of these other companies that we talk about is we've talked about in the past resource investing in these natural resource companies. They're like burning matches, right? They're not heirlooms. They're not something that you just buy and you hold for 20 years and give to your grandchildren. These companies are involved in cyclical industries that go from boom to bust. They're like burning matches. What do we mean by that? If you hold a match in your hand, it eventually burns down the match and burns your fingers. So you can't hold these things forever. You have to buy them low and sell them high. But how do we figure out what are the best companies to buy? And I found that Doug Casey, who is a legendary speculator, came up with what he calls the 8 Ps of resource investing. And I think if we look at these 8 Ps in relation to Jericho, it sets a very good stage for the future of Jericho Oil. Now, you can see the 8 characteristics that you need to look at when looking at resource investing. People. People are the most important thing in any company or endeavor, in my view. I mean, you can take an excellent project and you put some crappy managers in there, and I guarantee you they're going to tank that project. So conversely, we can have a mediocre project and have some excellent people, and they will be able to extract the maximum value out of that project. So people are very important. And I think that if you look at the Jericho story, what you see from the management there is a very savvy management team that understands resource cyclicality. And what I mean by that is, like I said, I've been following this company for about 3 years, and what I've noticed from them is they were prescient enough and intelligent enough to understand that when oil prices crashed, they were able to step in and take advantage of these low prices and distressed operators that were bankrupt or didn't want to be in the business anymore or couldn't continue because of the lack of financing or the lack of liquidity that they had. So they took advantage of a liquidity crisis and a poor market environment and were able to acquire substantial portions of distressed assets in very prospective areas. And they did it very quietly. They didn't go around and put a bunch of press releases out and look at me and go into conferences. They just put their nose to the grindstone, got their land people out into these counties, and put together a land package. Speaking of that, these properties, I'll show you a map later on, but we have with Jericho involved in a play in central Oklahoma, right outside of Oklahoma City, called the Stack Play. And it's basically dominated by 4 or 5 very large companies like Devon, Newfield, Marathon, and a new company that came out that was a private equity deal that just came public. So there isn't a lot of news and there's not a lot of knowledge of this play. But I think what you're going to find if you investigate it is that this stack play is one of the most prospective, low cost, and prolific plays. In some respects, it's even more prolific than the Permian play in West Texas that's getting all the attention. So the properties are there. We've got the properties. Okay, third thing, financing. Use a little takeoff there. It's supposed to be F, I know. PH, you get it. So you got to have financing, right? If you go and look and see who the backers of Jericho are, it's not a bunch of stumble bum retail investors. You've got some serious people involved. You've got the former CEO of Chaparral Energy, who sold out his properties for about $500 million. He's involved. You've got a Breen family trust involved. You've got people that are former CEOs of like major corporations like Dow Chemical involved. You've got very wealthy people, connected people that understand this, and these people that are involved, these wealthy families that are involved, this is why one of the reasons why Jericho has been so successful. They've been able to write checks immediately and take advantage of these low prices. No having to have a private placement and trying to convince retail investors to put $10,000 or $20,000 in a private placement. Just rent, got a property over here. We need a check written for $10 million. Boom, it's done. Fourth thing, paper. That's how much stock is out there. The stock is not really. There's not 500 million shares out with 100 million warrants that are going to come out. They're going to get exercised. It's a pretty tight with the stock, and I think that bodes well. Promotion. The company really hasn't been promoting itself. About the only other person I've seen writing about this up until this article that came out last week was Bob Moriarty at 321 Gold and 321 Energy. He's been a long proponent of this company also for the last 2 or 3 years. So they've done that deliberately. They didn't want to draw a lot of attention to what they were doing. I mean, the big players that were there had amassed their acreage positions. They didn't have to go out and put a bunch of press releases out. They knew what they had, and little Jericho didn't want to attract a lot of attention when it was trying to put its land package together. That to me shows another characteristic of the management being smart. Now that they've accumulated their land package, they are ready this year to start harvesting the fruits of what they have. And I think we will see a lot more press releases and a lot more promotion. Politics, we're in Oklahoma. Politics are not an issue. There has been some legislation recently around fracking because of the earthquakes, but I don't think it's going to be that big of a deal right now. Push. Well, we're finally getting some push now. We're going to see the company's participating in a couple of wells farmed in on some joint ventures, and we're going to start seeing some wells are being drilled as we speak. And the CEO, according to Keith Schaefer's article, is saying that the oil production could go from up to 2,000 barrels a day exit 2018. So that obviously, if you triple or quadruple your oil production, I think you probably will see some interest from the investment community. And the price of the stock has been up quite a bit over the last 3 years because there are people that did recognize the value and saw how the company was put together a land package, and we're familiar with this play. So we've seen the stock price basically go up over the last few years. I mean, I've been in and out of it a couple times. I'm in a long-term shareholder now, back in because I really think this thing is going to really do well. Little short story. I kind of have some experience with this play. I built a wind farm in Kingfisher and Canadian County, right where this Newfield is doing all their drilling. And I remember 2 years ago, just dealing with Newfield and all the pipeline operators. It was just, we had great difficulty trying to put the wind farm in because we were working while drilling was taking place and while pipeline companies were putting all these gathering lines in. So we were crisscrossing each other and having to deal with all of these pipeline companies like Mark West and deal with Newfield, just trying to do simultaneous operations on the same parcel of land. So that was 2 years ago. And I knew, at one point I was a shareholder of Newfield. I did this before I knew about Jericho, just because I saw how prolific, and just from the conversations I had with people out there, that, at the time Newfield was talking about putting $1 billion into this play. So I mean, there was just constant activity out there. It's just unbelievable. I haven't been up there since then, but just from what I've read from the Newfield and various presentations I've seen, this is like the big focus for several of these companies. It's just that prolific. So I think Jericho's got themselves in a good situation here. So this is kind of like a little thing that I say sometimes, or where's the best place to find oil? Right next to where it has already been found. So this is a map, basically shows Kingfisher County, Canadian County, and Blaine County, and Oklahoma City is basically right outskirts of it, or right down here, basically. But this is where area I was working in back in 2015, and this gray area is all Newfield property. This is AMR, which is a private equity that just came out, issued stock. And you've got some of the other operators here: Devon, Continental Resources, Marathon. So, okay, where's Jericho's land? So this is what gets me excited. Right here in northern Blaine County, this white, open white areas here, where you don't see any other operators. Quite a bit of this land in here is where Jericho's land is. So you can see that they're surrounded by basically all these other big time operators. Like we said about Newfield, this is Newfield's biggest investment for their company is this stack play, and you can see right here that Jericho's land package where they're operating is right smack in the middle, or on right around where we've already seen quite a bit of activity by some major companies. So this is a slide I took from Newfield, from one of their recent presentations. And again, this is Kingfisher County, Canadian County, and Blaine County. And that's at these blue specs you see are Newfield leases. And you see these little circles. These are wells. You can read the different wells and see how prolific they are. I mean, look, you get the brown well here, 1,099 barrels of oil, 59% are barrels of oil equivalent per day. That's gas and condensate also, 59% oil. You can just go around and look at these. Get the Bravo 28, which is north of where Jericho's land package is, 2,063 barrels of oil equivalent per day, 65% oil. So you can see that Newfield's having tremendous success, and we're smack dab in the middle of this, right in here. So there's no guarantees, of course, but when you start seeing these finds around here, I don't think that this is probably, I think the play obviously extends into this area. And I would encourage people to go to some of the other operators' websites and see what success they're having. That's part of the investigation process. Is this just unique to Newfield, or are the other operators around here seeing the same results? I think you'll find that they are. So just to sum it up for Jericho, stock popped this week. It's finally getting some attention. I think the management now has got their land package together. They're starting to drill wells. I think now that they're confident that they can let the story out. And I think that if we see a positive news flow and they actually are able to find and bring online some decent wells, we could see the stock price really move higher. And I think what's going to happen here, guys, is that it's my contention that oil prices are going higher over this year. I think that the market's got it wrong. We're going to see some, big demand this year. We're coming out of the refinery turnaround season. We should start seeing the draws on inventories, oil inventories, start to resume. And I think that the contrarian view for higher oil prices stands a good chance of happening this year. The thing that's really interesting about this play, and I really encourage you to, I'll put a link to Keith Schaefer's article. It's also, I have a link to it on my website. I wrote an article about Jericho on the website also. But this is one of the most economic plays. I mean, you're talking about internal rates of return of anywhere from like 80 to 140%, and that's at $50 oil. And those were calculations done by Newfield and some other companies, Continental Resources. So even at $50 oil, and we're at $60 oil right now, I mean, you're talking about full-blown drilling, and you can make a ton of money at 50. And this overpressurized oil zones that they're operating in here, they make money down to $25 a barrel. So I think this really in a sweet spot here. This rocket's getting ready to launch. I think we saw the initial liftoff last week. Obviously, it could pull back. I mean, it had a big move on a lot of volume. But I think that as long as we don't have a psychotic break in the stock market or the economy expands, world economies plan on, they're forecasting almost 4% growth this year worldwide. Oil demand is going to go up. I think the price heads higher. And so you've got the wind, you got a lot of wind to your back here, just when Jericho is commencing their drilling program and development program in this place. So big things getting ready to happen. I still think it's a buy. Stock pulls back. It'd be even a better buy, but I think buying an initial position if you don't have one, and then buying some more if it was to pull back, would probably be a prudent thing to do. Obviously, it's dependent on the oil price. If the oil price goes down and we're wrong about that, well, all oil stocks are going to take a hit. So I think a lot of this is incumbent upon, what oil prices do. But, that's one thing we need to watch, and then just watch for the results, which I think we're going to see a steady news flow from Jericho throughout the year. The other thing I want to talk about, guys, is another one of our holdings, or my holdings. I don't know if you bought this, but this is Ensco. It's an offshore oil drilling company, probably the best one in the world in my view. And one of the things I want to talk about was I've listened to quite a bit of the offshore oil drillers' fourth quarter and year-end results, and I'm seeing some cautious optimism. We're starting to see the utilization rates for rigs start to increase. And we've talked about this before. I'm not going to delve too far into it, but basically, as oil prices have increased, cash flows at oil companies have increased, which allows them to reinvest in additional, finding new oil and developing fields. So that's going to trickle down into the oil services providers, specifically the offshore oil drillers, Ensco being one of them. And what I wanted to talk about is something I want people to take a look at and keep an eye on. What we're starting to see develop here, this is a weekly chart, goes back to almost late 2015 up till current times. You're starting to see a technical characteristics start to develop here. It's not fully confirmed, but it's starting to develop, and that's the double bottom. You can see right here the stock price, bottoming down here at $4 and change. It rallied up recently when oil prices kind of had their little spike to $66 a barrel recently. The stock rallied above 7, then it pulled back, and basically you see this made another bottom that was right around the previous bottom. So what we're looking to see here, to see a confirmation of a double bottom, would be, you see the first part of the W, you're looking for a W, so you go down, up, down. We would expect then to go up. We would expect to see, for confirmation of a double bottom, we would need to see the next move higher exceed this $7.50 range, the middle of the W. So we want to see this finish forming the rest of the W and then exceed the $7.50 range to confirm the double bottom thesis. Now, you can go and look it up on Investopedia or do a Google search on technical analysis, and what you will find is a double bottom is a very, very powerful indicator. If we actually confirm, I actually believe fundamentally the industry is bottoming, and this technical double bottom formation that I think is forming here, if we can get up here above, this previous high here and confirm the double bottom, then I think that we will have confirmation that the bottom is in place. And these are powerful, like I said, indicators that if you confirm, we will see vastly higher stock price. Now, it's not confirmed yet. It's something to watch. We will watch it over the next few weeks and months. It will take some time for this to develop. But if you are really aggressive, like I am, I'm really thinking about going in Monday or next week, just depending on what action I see. And I'm thinking about buying some long-term call options at the $5 range. That you can get some that go out to January 2020 at $5, at the $5 strike price. And even if you're not that aggressive, I mean, if you don't have a position in this stock, it's pulled back quite a bit at $4.75 with a 20% or 25% stop under it. I don't think you can go wrong. I think Again, if the oil price stays where it's at or moves higher, this stock does well over the next year, 18 months, 3 to 5 years. So I think we've talked about the cyclicality of this industry. That was the focus of the talk of the video last week. I encourage you to go back and look at it if you haven't seen it. Go in depth into the various 5 or 6 cycles that have happened since 1982, and these things always recover. That's just the nature of the business. It's feast or famine. The famine is now dissipating, and it looks like technically we're starting to see that actually develop. Um, Conservative guys should just wait for the confirmation of the double bottom. If you're really aggressive, like I said, I don't think you can go wrong right now if you don't have a position getting in there right now and start building a position down here at 475. You put a 20-25% stop on the thing, I think you're protected. So I think that we are going to see over the next month or so a confirmation of this double bottom, and sentiment, is still negative of the market towards energy. Energy has now shrunk to one of its lowest levels in the S&P ever, and I just don't see this time being different. The lack of investment that's taken place over the last 2, 3, 4 years because of the low oil prices is just going to manifest itself in higher prices down the line. You have to constantly invest in this industry to maintain production. We're not even talking about production growth. Just to maintain production, it requires a tremendous amount of recycling of cash flows that just weren't there over the last couple of years. So that's the thesis. Take a look at this, guys. I think it has some excellent opportunity. You're talking, several 100% return possibility here over the next couple of years. Okay, that's it for this week. Appreciate you listening, and we'll talk to you next week.